Hi, I'm Martin Frick, CEO at Moneythor, and welcome to the Deep Banking Podcast. Welcome to the latest episode of our Deep Banking Podcast. Today I'm very pleased to welcome a guest from the Middle East. Welcome Ahmed Gaber, CEO of Coor B. Maybe we kick us off by you introducing yourself and introducing Coor B to our listeners.
Sure, Martin. Thank you very much, Martin, first. It's a great pleasure to be with you today, and I truly appreciate the hospitality and being with you today. My name is Ahmed Gaber. I started my career in payments and banking technology from the year 1999 or 2000 to be very specific. And on the professional level, I'm graduated from computer science. And as I told you, I started my career in payment and technology. And engineering was really helping me much to organize my thoughts. And then I moved from engineering. I started in a company called CashNet in Egypt, which was partnership between Euronet and CashNet in Egypt. And then we moved quickly to become a processor, which was called National Processing Company, NPC, which was acquired after that by NI, Network International. And then I started my regional career in 2006 when I took over the operations of Visa International in Saudi Arabia in 2006. And then I became the GM for Visa International in Saudi Arabia. And then after that, Vice President for Visa for GCC region except UAE. And then North Africa region. So in total, I was able to operate in 11 countries in the Middle East, and that was great career and great luck for me. So shall I move now to what is Coor B?
Yeah, please give us a quick update on what Coor B is.
So I was always thinking if I can, me and my partners find a way to help banks to operate faster, to launch faster, and to work faster with more efficiency, of course, and the right risk procedures and compliance procedures at the same time. So I didn't want to launch just a technology company which can operate and help, because at the end, the people who have the wrong mindset can be running the show. So I wanted also to have kind of business partners working with the technology partners in the bank and working with the business partners in the bank. So Coor B is a mix of two. We have a consulting arm, which is not the same typical consulting arm which you see in the Big Four and the boutique consulting. It's kind of hands-on consulting where we step in and support people and support bankers to write BRDs, PRDs, business requirement documents, product requirement documents, and technical requirement documents. And then we speak to our own technical team so that the synergy between the two is quite easy, because they are the same company and they are the same team, so they know how to talk to each other. So that's how we started.
Okay. That sounds like a great achievement, and I think you sound like being the perfect guest for the topic of today. I want to take our listeners a little bit through a journey of the Middle East and Africa, because we have a global listener base. Not everyone is familiar with the region you do business in. You as a person and your company are very exposed to that region. So I want to talk a little bit about the evolution, where we are now and where we are going in Middle East and Africa. So maybe if we start out, when you think back about maybe the earlier days of your career, how have you seen financial services evolving in Middle East and Africa over the last 10, 15 years? What stands out for you if you think about the evolution?
Okay, you are going very deep from the beginning, Martin. Okay, so I would say I think I have seen much in this area. So I have seen from the very early days of just moving from Magstripe to chip and pin, from moving people out of the branches to try to put as much services online. I think, Martin, the Middle East, and when I'm talking about the Middle East, just to be clear, I'm not talking about every country in the Middle East, because the Middle East, yes, it's one region, but you have the GCC, which has their own way of working and their own way and their own even financial capabilities. And you have, for example, North Africa and Levant, which have lesser financial capabilities, but also they have great manpower and great minds. So you have different countries within the region. The Middle East is regulatory and government driven region. What I have seen clearly, when the government is taking the digital transformation overall on a country level, the banking industry has to follow. So I have seen, for example, how the UAE was pioneering this 10, 15 years ago. And recently, not very recent, but it was like 7, 8 years ago, when Saudi Arabia started to pioneer this. And even Saudi Arabia now, when the government services, is number one in the Arab world when it comes to introducing. They have around 95% of the government services, or 90+% of the government services being online. So there is very strong correlation between the government efforts in this region and the banking efforts. Now, assuming that we are in a region that the government is leading this and driving this in a good way, how the banks are, and not only the banks, the fintechs and the entire ecosystem are capturing this opportunity. It's different from bank to bank, how culturally this bank is looking after the transformation and digital transformation. Some banks at that time, I remember 10 years ago, banks were having KPIs around how I will reduce traffic to the branch. This was kind of the KPI. And some other banks were talking about it from how can I use data, and how can I utilize data, and how can I personalize my offering and my services based on this data. So, and some banks were talking about customer experience and personalization of customer experience. Every bank took it from certain angle, and every bank reached to certain success. But I think if I can say that the banks who didn't make it really to the real transformation are the banks who just focused on the front end of the solution, not the real culture of the bank and not the people in the bank. Because in my humble opinion, digital transformation in the bank starts by the culture of the bank, not starting by buying the best solutions or investing in the best resources which you can bring from all over the world to support you. Because if you don't have the right culture, you can have one person or two people impacting the whole digital transformation. And that's where the leadership comes. And the bold leadership comes when they identify that there is something related to the culture which is impacting their growth. They have to take very bold decision, because simply the people who built the legacy solutions and built the legacy systems cannot be easily, unless they really adapt and improve, cannot be the same people who are going to take the bank or the organization to the next level. They have to have different mindset, and it's very difficult to change the mindset of the people, especially if they are senior position.
So you're saying that a lot of this change has been driven by governments becoming more digital, regulation. I agree with you, having been in this for even longer than you, that banks are very complacent animals. But sometimes they're also driven by consumer behavior. So how do you see the role of the consumers, or let's say, the way people are consuming banking services changing in the Middle East when you compare it to the beginning of your career to now?
It's a great point, Martin. I think there are two different or three maybe different personas we are talking about here. What I noticed, and based on behavior and based on studies, that Gen Z and the younger generation who are like up to 30, 35, what I noticed nowadays, what they do is, and that's actually not my notice, I noticed that from data, you have a principal bank which you are dealing with, which is the bank which you are putting, your salary is transferred to this bank, and the lending comes from this bank, your loans comes from this bank, your housing finance comes from this bank, your mortgage comes from this bank, everything comes from this big bank. But they go for a very nimble and very nice PFM, for example, personal finance management frontline, fintech or wallet to operate their daily work, because they hate the bank, the giant bank mobile app. And when I say mobile app, it is the only communication channel between me and between my bank. So if this communication channel is not as convenient as I want, I will move my money I will continue to get my salary to this bank, but once I get my salary immediately, and sometimes I can put standing instructions that I keep the money which is needed for the loans or pay back of the credit card or whatever, and I move the rest to one of the very advanced kind of wallets or digital banks or whatever. And we have examples here if you want me to mention names, but I don't want to piss off some people if I forget names. But I have seen that in the UAE very clearly, that people taking salaries in big banks and moving the money right away to one of the digital players, which is much more nimble and easy to perform all the transactions in an enjoyable way. You enjoy actually banking in this app.
Yeah, that's I think a similar trend we see across the world, especially in emerging economies, where also the population is very young. You know, when I look at my parents' generation, I think they stayed with the same bank for all of their lives. I'm most likely somewhere in between. My issue is very often trust. Can I trust this new thing that it's going to survive for a while before I put money there? I think the younger generation is more driven by experience, by user experience. So if you think about user experience, what are the things that are hot or are important in Middle East Africa from an experience perspective right now?
Okay, yeah, I agree with you. By the way, the generation of some people who are above 35 or above 40, they are still sticking a little bit to the branch, and I am one of them. I still sometimes go to the branch because I have kind of emotional connection with the branch manager. So and I know him from a long time. But what people are looking for, number one, user experience is becoming very, very important. Like, I don't want to make like 7 clicks until I get my transaction done, because every click is a pain. Every click I have to wait for the next one. I have to confirm. I have to press something. So for every transaction, if you have lesser number of clicks to reach to your goal, that will be great. One aspect which is becoming super important, and I noticed that from various projects we are managing now, access to credit, access to loan, access to micro loan, immediate access to loan. What I noticed very clearly, that people now can compromise on the interest rate and compromise on the cost of the loan against the speed of access to this money. So if you want to apply for a personal loan, you don't want to wait for 3-4 days and then you get asked to provide hundreds of documents, and then they say to you, this is not clear, this is not your signature, send again and send again and send again. And it never happens in 2 to 3 years as promised by the bank. It happens sometimes in 2 to 3 weeks and sometimes in a month time. And sometimes you need, like, I was doing a banking transaction today, and the gentleman asked me to send him a document signed by me, and I put my electronic signature from the phone. And he said, no, this signature is not matching your passport signature. So while I took it copy and paste from my passport signature and I put it there. So, but it's personal opinion, and you cannot say anything to this gentleman, and you have to find a way. And then,
what are the main differences in the regions? You were mentioning GCC as a region, North Africa as a region. So what are the main differences? How they approach problems? How are they where do they stand on their digital journeys?
Okay, I will tell you a story, Martin. All right, and this maybe will be half of the answer to your question. So until 2018, I was operating in the GCC region, okay, and I had some great experience in some countries in the GCC, and some countries were slow, some countries had some legacy systems, had some mindsets of the people who are in the leadership which were unable to launch or unable to make big decisions in the transformation, but it was great experience. And then I moved to North Africa region. North Africa region is quite unique because you have starting from Egypt to Libya to Algeria, Tunisia, Morocco, Mauritania, Sudan. And I was surprised when Sudan, when the sanctions were lifted from Sudan and when Visa started to operate in Sudan, the Sudanese bank and the Sudanese people surprised me actually with at that time they were going out of era of sanctions. They didn't have great access to technologies from IBM, from Microsoft, from many American firms. But believe it or not, in less than 6 to 8 months, we had 9 banks operating in Sudan on Visa platform, and they were really on the top of things. And so that's why, again, I'm coming back to you with the drive and culture, because the culture at that time was, we need to come back. We need to be on par with the rest of the world. So this drive and this culture surprised me much, that how come nine banks very quickly, they had the license, they made the certifications, they went live, and they worked very quickly. So that was an eye-opener for me, because it's not only about your financial capabilities, it's about the culture more actually than the financial capabilities. And they used maybe 10% of what we used to see from financial contribution in Egypt or in other countries or in the GCC, and they were able to do it because they were very efficient in doing it, because they know that they don't have that much money to spend. That's on North Africa region. How different is it? GCC is very lucky, because GCC economy is doing great, and they are working on many strategies globally to move out of dependency on oil and having more source of incomes, not only oil. So the strategy was very clear for the GCC, that digital transformation is the direction in the future to grow and to become bigger in the economies. So GCC have done phenomenal job, and it started actually by the digital identity. If you see here in the UAE, the Emirate Pass, and in Saudi Arabia, NAFIS, and the solutions for digital identity, and again started by the government, because without the government you wouldn't have done the digital onboarding, which is confirming the identity of the person from the government. And then came after the banking evolution, the fintech evolution. So you see, for example, some fintechs are eating phenomenal share from the banks, like fintechs like Tabi and Tamara, who are working in buy now, pay later. This money was supposed to be credit card money spent, but all of these billions now we see it on these startups. A company like Fawri in Egypt, they are doing phenomenal job in bill payments and even microloans. And this, if the banks were ahead of the curve at that time, they would have been able to do this. But Fawri was more brave than them, and they have done it. And I don't want to miss any more, because they're all friends. But truly, the banks who, in my opinion, whether we are in the GCC or North Africa, the banks who will not change their culture, specifically mindset and culture, not spending, not bringing the best solutions globally, not bringing the top 4 or the big 4 in consulting, the culture for execution, the culture of not blaming, the culture of finding solutions, not shaky hands to sign papers. If the culture will not change, and they will act like a fintech where they don't have much to lose, they will become successful. And I'm yet to see this in many banks in the GCC and North Africa. Okay, so you were alluding a little bit to the different speeds different regions take. Maybe it's also sometimes easier to be speedy if you don't have legacy. So actually that was triggering a thought in me, because you were alluding to the fact that, of course, these regions are in difficult stages of their economic development, little bit like in Asia. Myanmar is not Japan. So this also means, in conclusion, that the consumers have different levels of wealth. But do you think there is a difference in consumer behavior in Sudan or in Dubai, or do they in the end all behave the same? Do they have the same expectations around convenience, around being served, etc.? Or how do you see it? How do you look at that? Okay, this one is tricky, because consumer behavior is dependent also on the purchasing power of the people. So sometimes you need the bank for your basic needs in the life on a daily basis. And every one of us, by the way, will need a bank almost on a daily basis, either by buying something, or by a credit card or debit card, or by paying back a loan, or by making a transfer to family or friend. but it's also directly connected to the purchasing power. So in the GCC, what I noticed, for example, in the last few years, the consumer is expecting to have investment platform in the bank. The consumer is expecting to have ability to transfer money to various countries and to transfer at a very good rate, because they transfer big amounts, so they care much about the transfer cost. The expectations of in the GCC is, I don't want to go to the branch. If I go to the branch once or twice a year, that's a failure to the bank. That's what I have seen in the GCC in a very clear way. But in North Africa, the expectations are quite different. In North Africa, what I have seen, I want nice customer service. That's where we start, because customer service now, for example, in GCC is great. You call the bank, you get what you want. If you don't get what you want, you know how to complain. When you complain, you get a very good reaction from the bank. I'm talking about, the normal case scenario. There are extremes where you don't get it, and there are extremes where you get it perfectly. But I'm talking about, the 80% of the cases where life is normal and rosy.
You're saying in North Africa, people are still using banks, because when I'm a bit more familiar with East Africa, for example, Kenya, everyone is transacting with M-Pesa. In Rwanda, they have something similar. There are wallets that come from telco providers. So no one is using banks really to transact. Is it in North Africa still the banks they transact with, or is it also more digital wallets and so on coming up for transactions? How do you see that?
As I told you, it's country different than countries. So, for example, if I take Egypt, they launched a fantastic solution which is called InstaPay, and the number of people who are using InstaPay for transfers and paying bills now is phenomenal. The success of this solution is phenomenal, but believe it or not, it's also government or semi-government owned platform. Okay. So the government invested much in order to get into this. It's a fintech, but it's also government owned or owned by all the banks and the central bank in the country. So the government played a role here. To your point, unfortunately, in North Africa, the majority of the people, if you really, it's worth running a study on that, how many people are using the banks for their daily transactions and how many are using wallets. But in Egypt as well, again, I'll go back, there are companies like Vodafone Cash, which are doing well in money transfers. So in Egypt is a special case. So then, believe it or not, also there is a wallet called CyberPay, which is doing also phenomenal there, and people are using it more than the banks. But it's not in every country, unfortunately. And if you ask me why, I would say it's about regulations and government. Again, if they give a space to these companies, because every startup would like to expand. So if a startup from the GCC wants to expand to Morocco or Algeria, if the economy is allowing these foreign investments to come and to work and operate in these countries, will be great. But there are many considerations related to the national security, related to the access to data, and that's why it's not evolving as you think, or as you want, or as I want, due to other factors, not just related to technology and people, but also related to national security from some countries.
Okay.
So they wait until they build it.
Now, as a change driver, I heard government, maybe consumers a little bit. What about the third classical change driver, technology? I have to bring it up, AI. Everyone is talking about AI. So how do you see technology driving this change in the offering and in the way it is consumed?
As you rightly said, I felt it when you said that I have to bring it AI, because it's everywhere now. Like if you remember, Web3 came like 4 or 5 years ago, and no one now is talking about Web3 much as before. Crypto people are still talking about it due to the changes which are happening on a daily basis in the crypto. AI, I think, in my opinion, AI is built to stay. AI is very difficult to take it out. AI will continue to evolve.
Okay. So this brings you a little bit, brings us to the end of today's podcast. So thank you very much, Ahmed, for participating. Thanks a lot.
Thank you, Martin, and I wish all the best for Moneythor as well. We are working together, and I see great products, great vision, and I wish you all the best and all the success, Martin, you and your team.
Thanks a lot.
Thank you.